Hello and welcome. Back then's date was the end of the first week of March 1977. The gold price, which reached a high a few years back at around close to 200, falling back to 100, has been doing well so far in its recovery stages. And I don't got the data before, but it had a good bull market run, of course, suppressed at that $35 price just a few years back. Take a look at Fibonacci from this low to this high. It got through the first 38.2% exponential level at 127, supported it, didn't resist it, which I thought was very, very interesting. And now we can see coming up to this level. So it's going to be a very, very interesting test. Yes, we might find resistance, but if we break through this next level, of course, 180 and then breaking above that, well, let's see. 1978, end of the first week of March. Price action managed to have a good run. So now, where do we look at this point? Well, at that previous high. Maybe we correct back, but this is where I would be focusing on Fibonacci for an upside target level. Upside Fibonacci would stay at about 385 would be the next key level. 1 year later, as we approach 1979, and this will always be at the end of the first week of March within its given year. And in this year, it's been able to maybe come close to it, but continue its run higher. And again, I'm missing data, which goes down from $35 up to this 188 point, back down to 100. And what a year it was in 1979 for, well, that 385 mark actually did have that little bit of resistance, but you can see that if you don't resist at a key level or even weekly at such, and just when you break out and you get by that level, a concise, fast move to next one, and the next one just happened to go up to this point. At this stage, you'd be flabbergasted by these moves. Like, wow, this has went from 100 up to 800. Can this go up anymore? Obviously, we know the answer at this stage would be no. But you'd have to continue. If you'd want to see signs of it going down, well, we've established support and we all know what happens forward. Let's go a year later. And we can see how we had the intra-year rally of 1980, which came before this 866 mark or near it. It topped in September. And it was a lower high one. We've seen weakness amongst the 18 average of lows in October. And it has continued that way all the way through. On the January start of the 1981 year, it had its nice clear exitation of the such, and this thing is now in a declining mode. 1 year later, let's take us to 1982. Sure enough, the price action continued a full decline. So you'd have to calculate maybe some Fibonacci. We can do it from, well, we had these 100 lows, but again, we're missing data. We knew that this was a higher low from the move before at 35. $411 represents a 23.6% Fibonacci correction or exponential from the $35 low and these highs. And we can see in here that it did not support that until in here. It supported a little bit above it. And now the resistance from it has been in place. We support it here May, June, whatever, 1981, and then leaving it here at the end of the 1981 calendar year. As far as a 38.2% correction, that's $252. Let's fast forward one more year. And it never made it to that number. It came close. It continued its downtrend up down to the summer solstice. Price action managed to get to and not resist and rather support this. So at this stage, you could be saying, oh, are we talking about reversal now? reversal of trend, stage 1, establish support or band flattening out. Number 2, establish support. That was done at 500. Come back to the band. That's been done. And now break it. We can see it was close in here, but this thing got rejected in the February 21 week and is now supporting within this key Fibonacci level. Let's go to 1984. With continuation amongst this fib mark, now been resisting it currently. Another attempt here we can see in getting above, but if this fails, yeah, we're going down to that 250 mark next year. I guess we're going to be there soon because it's been nothing but continuation downtrend. We've supported this barely, resisting 411, 252. That is almost, seems like we're definitely would be going there. Spoiler, it probably does. But does it do it in 1986? Well, let's see. And then up here in 85, well, I guess I should have does it do it in 85, but no, we had a situation where it stabilized for that year. Still, you're in a correctionary mode that has established this level of resistance it never got above before. And it still is holding that key level at 300. But we have been getting signs and statements that it's going to 250. However, at 385, higher highs and higher lows. In the following year, in March of 1987. What a year. In 86, it comes up to this point. Okay, stabilization, but again, it's got to get above this 500 level. You can do this sideways type of technical analysis, or just knowing that we've been here before. It's got to break it for us to start to say that this bear market is over. It's been a decent size already, but almost a full decade. But major consolidation right now here at the fib. 1 year later, 1988. The market continues to increase and get above that level. And not only that, but come close to and practically even testing that previous high. If this thing breaks out at that time, you'd be saying, okay, we can support this. So must hold areas like 350. However, we have to go through another year. In 1980, we're in 88. So this is now 89 is the next year. Well, there was decline. Supporting the Fibonacci, but then not getting much of a bounce and then leaving it and undercutting these lows that it had from October. In 1990, we hit a little bit of a bottom, but now back in here, stabilizing. A lot of these now noticeable lower highs and higher lows, because we have this high, this high, this high, this, and this high is pretty much matching. As far as the lows are concerned, at least from here, I mean, yeah, this is lower, but this has had a good sustained rally. Have this, and we've got this one. So a lot of neutrality at this point still. 1 year later from this level, just more of the continued consolidation. Year later, low volatility, and we're just having excitation here. Like we can see this level of support at that time was starting to break down, and those lower highs still in play, and still this level hasn't even been tested yet. A year later, little bit of slow declines, 340, but every time getting above the 18 average of highs for years at this stage has been failing, and now a long sideways correction. This is getting extreme. This is a decade and a half at this point. Continuing on, 1 year later. More battle within this Fibonacci, more of these higher lows. As we enter into 1996 next. And what a start of year it was that year. As we have these higher lows breaking it, man, this looks like gold's ready to be popping, ready to go. I mean, 250, as if 250 was going to come into play. I mean, that was whatever. A year later. And, well, that was a down year for the 1996 session. As we have another leaving at this 411 mark. And now at this, or then, whatever, I'll say now because I'm living that moment. Still 252 is a long ways to go. It's a year later. And okay, it's close, and I guess it's going to get there. And now you just know. It probably will. It's been nothing but a downtrend. Yet stocks at this stage, you'd be saying, have been going nothing but up the entire time. And I'm not going to put the ratio of what gold to stocks would be, but, well, it would tale of two markets, let's put it that way. Especially back in the 70s, it was a tale of two different markets going in, we'll say, opposite directions. A year later, from the start of 98 is 99 as we enter the Y2K scare years. And for those who are not familiar with Y2K, year 2000 was a computer scare bug where the computers just going to all stop working come the first day of January 2000. That did not occur. Well, sideways action through the 98 year. As far as 99, how did that year go through? Well, it started off going down. Pretty much hitting that number exactly on the Fibonacci. But we'll see how... I guess it did have a bounce already. And what a bounce it was. As it rallied up to the stage. Good volatility. We could just see how the size of these moves just thinks, hey, maybe something's going to happen coming soon. Well, a year later... oh, it went down again. So we're having another retest of this 250 level. This resistance hangs in with that support. And I suppose if it starts rallying, we'll put Fibonacci from this low to this high. But I think we'll wait until we get past that 4. If it ever does get past that 411 mark. Anyway, a year later. I'm sarcastic with it if it ever does, by the way. And bouncing nicely. We've had resistance here. Holding this area of support up to this point. But a long ways to go. 400 is obviously going to be a key point. But here we have 325, 330. Just normal previous levels before. Probably 330 would be where you think an okay move would come. If it were to come, of course. And a year later, it did. As we enter into 2002. And we had an up run here that ended down run, up run, down run. So I guess we're in an up run now. Having a few higher highs and higher lows. So next you'd have this 338 followed by the 411 1 year later. Up to 330 and change. So a nice little possible reversal, people would be saying at this stage. And some people would have been buying like crazy, but not many people because, well, the glamour of gold wasn't too glamorous for people back then. As 2003 concluded, going into 04, price action did come up to this key, 400 Fibonacci level. And you have a pattern like this. You see an extended move, something it hasn't had since the stage in here. And the length of this correction now just extreme for how long it's been. But everything is going to change moving forward a year later. The price had a good spot where it, after resisted this level, it didn't go down much. Then it got above it, it supported, and I just find it fascinating how well these levels do support and resist and such. As 2005 played through, the price had an amazing year, and it's second half of the year again. So now it's gotten up to highs not seen. This thing is now all game changing at this stage. So in changing the Fibonacci from this low to this high, which is what I'm going to do, I'm going to remove the drawings and just put the lines in representing a 38 and a 61.8% scale. Levels coming in at 406 and 546, which meant that 400 number here does it just like it was before, the same resisting and getting above. And here we have resistance at this current one in December, and then now breaking above and supporting it 1 year later as we enter 2007. Price doing phenomenally well, holding upon this level. And now looking to make a move towards this previous high. And when you see this major resistance come in, holding and staying above that is definitely a very positive sign. 1 year later into 2008, the price of gold has gotten to $1,000. This is crazy. I guess this Fibonacci is over. So again, I'm going to have to consider where an upside target is going to be if this breaks this huge level at around $865. With the retracement that it had from a $35 gain, I just did some quick math. It's actually 3,000. I'm going to give you a spoiler alert. We're not going to hit it yet. At least within the video, the contents of this video. Maybe when you're watching it, it already has. But that would not be on today's date. And today's date, as I'm recording this, is March the 7th, 2020. But we're back a few years from this. This is 13 years ago. Actually, no, 12 years ago. This is 2008. In 2009, after the collapse of the great collapse of the markets occurred, gold took part of it as well, as it had a lot of this volatility. But as it went, it just came back to this just more beautiful, nice little area where it came from as resistance in 06 and 07, and holding and staying above here would be very big, breaking out above, well, 3,000 is the target. And a beautiful positive year as it now is talking about now all-time highs, getting above this resistance, holding well within this 18 at the time. A year later, even more beautiful gains. 1,400, yeah, 3,000 is the, looks like we have a next target there. Really a break-even year, having a lot of the sideways action, but constructive nonetheless. What a beautiful uptrend it has been going through, although it is in need of a pullback or a time correction. However, until it does, I guess a positive with a neutral bias should be your situation a year later. And it did have a little bit of one coming back to 12. Now we'll stabilize from this point. This is an established level of support, and it has only filled a little bit of this space. I'm not going to draw the Fibonacci lines in here because of what I already know is coming, but you'd be looking at 23.6% down. If that fails, 38.2% down, and so on. As we move a year later into 2015, we continue on with some more decline. And as time is moving on and you realize, okay, this is a situation where we've had before this long correction back in the day, long, good, significant rally, and we're starting to get it. The trend has been changed. How long of a correction, I don't know. Is there any signs of this breaking out right now? And the answer is no. It had an opportunity here, but it's showing a lot of weakness getting out above here. This rally attempt in 2014, same thing. So there's no signs yet that this thing is ready to go off by any means for any spectacular moves, or even have a test of this previous high at 1900. A year later from this point on, we continued the decline close to $1,000. This little downtrend, but for the first time, it's had a decent style break above the 18, or the best one. I mean, you have this one here, this one here. This one doesn't even really count, but this one, hey, maybe this is the start of a fantastic rally. A year later, well, we had a decent gain, but it was a spot where we've managed to make this higher low, establish more. Okay, we came back to this point. Okay, a year later, entering 2018, well, we've got this nice uptrend line and still hanging in there within this level. A year later into 2019, I suppose it's kind of choppy, but and just more of this hanging in there sideways. But wow, this resistance level 1350, breaking it could be an interesting situation. Let's go 1 year later to now. It's gotten above that level. It's a game changer. It's a game changer as we do it this way. I am unable to skip another year forward from this point on due to the fact that I do not even own a DeLorean, let alone the blah 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 watts, gigawatts of whatever thing that Mr. Brown tells me that I need to go back to the future, somewhere that I've never been. This is a pretty dangerous weekly setup in here. Anyway, thank you for tuning in. Have yourself a great day. Bye bye.